All right, let's get into it. Something's shifting in the markets, and you can really feel it. That relentless optimism we've seen for a while, well, it looks like it's starting to run out of steam, and a whole lot of caution is taking its place. Today, we're going to break down exactly what's going on from crypto all the way to Wall Street and let the data do the talking.
For weeks it felt like the only way was up, but now there's this feeling of unease kind of creeping in. It doesn't matter if you're watching Bitcoin or the big tech stocks. The whole conversation has changed. It's gone from how high can this thing go to, uh-oh, how do I protect my gains? So let's figure out what's behind that shift.
Okay, so where do we start? Let's dive right into the Bitcoin market. You could call it the canary in the coal mine, right? It's usually where you see these sentiment shifts pop up first and fastest. And believe me, right now it is flashing some major warning signs.
Now, to really get what's happening, we got to talk about something called option skew. I know it sounds super technical, but stick with me, it's actually pretty simple. Just think of it as a fear versus greed meter. When that meter, the skew, goes negative, it tells us that traders are way more worried about a price drop. They're literally paying more for protection than they are for a lottery ticket to the upside.
And here's where it gets really interesting. Look at how fast this flipped. Data from MatrixSport shows that just last week, the skew was actually positive. A little bit of optimism in the air. This week, bam, it's plummeted to negative 10.6%. That is a huge swing. A number that deep in the red is basically a giant flare, signaling a massive rush for cover.
So, what's the big takeaway here? This isn't just a one-day panic. Nope. Traders are actively buying insurance against a drop, and not just for tomorrow, but for the medium term too. And when you see implied volatility, that's just the market's guess about future swings, creeping up towards 58%, well, that tells you the market is taking the risk of a big drop very, very seriously. All right, let's dig a little deeper into the options market to see this play out. If we follow the money and see where the biggest bets are being placed, we can really get a sense of this massive tug-of-war between the bulls and the bears. So, on one side of the rope, you've still got a ton of optimists. I mean, we're talking over $2 billion in open interest, betting that Bitcoin is going to shoot up to $80,000. So yeah, the belief in another huge rally, it is far from dead. But, and this is what makes it so wild, pulling on the other side of the rope is a nearly equal force, almost $2 billion in put options, betting on the exact opposite. So you've got these two massive, almost identical bets on completely different futures for Bitcoin. The market is just totally split down the middle. So, let's put that in simple terms. It means there's a massive group of traders with deep pockets who aren't just playing it safe. They are actively setting themselves up for a world where Bitcoin doesn't hold on and, in fact, takes a pretty big tumble. So the big question is this just crypto being crypto, its usual wild ride? Or is there something bigger going on? Well, the data is pretty clear. What's happening with Bitcoin isn't an isolated incident. This nervousness is spreading. And you can hear the echoes loud and clear over on Wall Street, especially in the tech sector.
I mean, just look at them side by side, Bitcoin and the tech-heavy NASDAQ. The similarities are kind of spooky. Volatility is on the rise for both. The cost of buying that insurance against a drop, it's soaring in both markets. And investors are treating both of them like classic risk assets, the first things they dump when they start to get nervous.
And this isn't just some abstract idea. This change in mood is happening right after Bitcoin has already dropped by about a third from its record high. A haircut like that is bound to make people jittery, right? It makes them want to cash in their chips and protect what they have left. And it's not just a crypto and tech story either. Take a look at the VIX, Wall Street's fear index. It measures the expected bumps for the entire S&P 500, and it just spiked to its highest close in months. That's a huge sign that this cautious feeling is going mainstream.
But maybe the clearest evidence of this whole shift comes down to one simple thing: follow the money. Where is it actually going? By looking at the capital flows, we can see if people are really backing up their fears with their wallets.
And wow, the numbers do not lie. According to CoinShares, we've seen nearly $5 billion get pulled out of digital asset funds in just the last 4 weeks. To put that in perspective, that's the third biggest exodus of cash we've seen since 2018. The money is definitely heading for the doors.
And it's not all about Bitcoin either. You can see it right here in the chart. The pain is being spread around. Sure, Bitcoin is the biggest piece of the pie, but major players like Ethereum and Solana are also bleeding hundreds of millions. This is looking like a full-on retreat across the entire sector.
But here's a fascinating twist. It's not a total panic. Not everyone is running away.
We're seeing these little pockets of, let's call it contrarian thinking. XRP, for example, actually had money coming in. And just like we saw in the options market, people are putting money into products that bet against Bitcoin. So you've got people making big moves on both sides of this thing.
Okay, so we've looked at the options skew, where the big bets are, how this is spilling over into other markets, and where the money is flowing. Let's tie all that together. What's the one big message the market is screaming at us right now?
And here it is, the main theme, the big headline, is a pivot to defense. It feels like that era of easy, just buy anything gains might be on pause. Right across the board, from the crypto diehards to the Wall Street suits, the main goal has shifted. It's not about chasing crazy returns anymore. It's about protecting what you've got. It's all about playing defense.
If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.